Hi everybody, happy Sunday. Here's the next video I was going to pass along to you guys. How to fade without getting killed. Okay, so let's go through this. Let's go, I get this 250 volume chart, and we can start with this one, I guess. This is pre-market on Friday. And show you a few tricks here. Let me just open this up a little bit so you can see that. I got tops and bottoms. Here's these white lines here. Those are a special study that I put together. All they do is show the tops and the bottoms of the bodies of the candles. Okay? And I'm going to show you why that's important here in a second. I've also got, and you can't really see them, they're a little bit obscured. You can see right here where you've got buying exhaustions. And what you want to look for is buying and selling exhaustions at the top of the bottom of the candles, or peaks in VPOC. VPOC at the end of a candle, like right here, for example. Now, somebody that was, say for example, you say, well, you know, I think this is the top, and I'm going to short this. I'm going to fade this move here. Okay, so you're looking at that 648 candle. You fade the top of it. You say, hey, I got a buying exhaustion up here. I've got a flat top up here. That was an obvious stop run right there. I've got VPOC at the top of this candle, for example, or at the top of the body of the candle. Okay, I got a flat top here, which basically means the top of the body of the candle was the same as the previous one, and that's important when you have two of those together, and you'll see here in a second. So I'm going to fade that thing. So you take the short at the bottom of the body right here, which would be 53.25, right? Comes down, and all of a sudden, well, where are you? What is the context of the trade? What's happened is, look what happened. You came down from here. You came up here. There was your short trade, okay? But you came back. You came through VWAP and came back down to VWAP and then bounced off it. And the market, it's a very, 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 very typical move of the market. Go through a level, come back, tap it, retest that level here, and then continue on your little merry way. So I'm down short down here, and I see this down here. Crap. What do I do? Okay. So what I would do is I would take, say I took the short right, say for example right here. Okay. Now one of the keys to this is catching runners. Is you can trade with 2 or more contracts. Now, I would practice this on the micros or practice this in sim before I will go live with this, but I think you're going to find it pretty profitable. So what happens is you take your first contract, you're entering 2 contracts, say for example here, and you enter this guy at 53.25. You come down, you see a flat top right here, okay? At the bottom of this candle, you see the reject. You coming down into VWAP, and you're going, crap, man, this is not a good thing. This is not a short, right? Because you're shorting right into VWAP. So you see this guy. Second this guy comes back over here, you take your first contract off. You made what? Let's see, from 53.25. You made 51.75. You made a little money there, but you made a 1.5. So you made 6 ticks. You paid for your trade. You made a little bit of money. You came down, and the first one, if you're believing that this trade is going to come down, that at this point you've got one contract left, right? So you're going to take a runner for the downside. You put your stop at up here at like break even plus 1. Okay, so your stop would be over 46.53. When it comes up, it takes you out. You made money and you paid for that. You made money on the first contract. and you paid for your trade with the second contract even if you got stopped out, and it continues on its merry way. Okay, if I was doing that, I see this kind of action down here, and I'm reversing right there, man. That's a good use for that reversal button. Bam, right there. Reverse that thing. Coming up, I see a flat top here. I short into that. I see a flat bottom here where those two are together. Okay, and you'll notice that those two are together at the bottom. Signifies, hey, that's the end of that short. There's the end of the long. There's the end of the short. You can scalp that. Okay, I've got one contract off here, and I've got my stop at break even or break even plus one. I didn't lose money on the trade. Okay, so I'm not getting slaughtered as I'm coming up. I'm still shorting. I'm shorting there and I'm shorting there, but I'm not getting killed, right? Because when it comes back up, I get the heck out. And I've made money. I've made money here. Made money here. Okay, where's my second one? Okay, I'm starting to look up here. Starting to look up here. Here's a top right there. I got a buying exhaustion up here at the top. I've got the body, the top of the body of the candle right here, and I got those little bitty wicks there. I'm shorting, or I'm coming long up into the very area high. I'm getting pretty close, so I'm thinking, well, maybe that's a good idea. Let's think about that short. So I would go short at the body of that candle there, or actually the short at the body of the candle here. Okay, and you can follow that strat signal. So I'm short from 58.50. Okay, fine, come on down. So I got two contracts on. Okay, I see a flat top or flat bottom here. I can take one off. I pop up here, doesn't go anywhere. Okay, so I'm still on the short, still on the short, still on the short. I see a bottom here. Do I want to get out? Well, you could if you wanted to. Or you could, if you got out here and you want to, if you wanted to, say for example, you wanted to counter trend this, you're coming down. Oh, I think that's a bottom right there because I'm coming into VWAP, right? So, hey, is this a bottom? Well, let's find out. So you presumably you're out of your long trade or your short trade. Okay, so you can go long at the top at the body of that candle right there. I trade the strat a little bit differently. I look at the bodies instead of the entire candle. The reason why is because I'm scalping during the daytime, and I want to get that as optimal an entry as possible. Okay, so I'm looking for short, small, little bodies right there to go ahead and trade against. So I come back down here. I'm long from 53. Two contracts, for example. I get a flat top up here. It comes back, but it doesn't come back very far. I still haven't taken out my stop yet. If I move my stop to break even on two contracts, of course, I got stopped out. Okay, so if I did, I'm stopped out on that. I didn't lose money on that trade. I made money. Okay, so come back down here. Here's another opportunity to, if you wanted to go long down here. Here's another flat bottom. Flat top, flat bottom, another flat bottom, go long. Boom, right up in here is a flat top. Ooh, not good. So you've got this 2-bar green formation right here, and then as it comes down through that body right there, you take the short. You would, if you've got two contracts on, I would get out up here, okay, for that counter trend for the long. I could reverse off that short right there, okay, and then just follow her down. Wherever you see a 2-bar flat bottom, I would think about getting out. Okay, so let's see. So I've got one right there. Red candle, green candle, flat bottom. So I could take one off there, follow it down. That is a flat right there, but those bars are red. Those bars are not green. And they haven't crossed back up. So this was a retest. Here's your buying exhaustion. Didn't go any very far. So that if you wanted to counter trend that's an early warning. I mean, you're hitting buying exhaustions all the way down here. There's a buying exhaustion. You got one selling exhaustion there. Look at that VWAP coming down. VWAP's right up here. VWAP comes down. Okay, there's your first opportunity to say, okay, are we done with the short, right? Move this up a little bit. Okay, are we done with the short? Maybe so. Okay, we certainly looks like, at least for this swing, we may be. So here's VWAP down at the bottom of the candle. I don't have a selling exhaustion. I get a selling exhaustion here, but then it runs right into another buying exhaustion right there. And I know you can't see that, but see if I can move it to where you can see it. Okay, there we go. So buying exhaustion right there. The VPOC's almost at the top of the candle, right? VPOC's moved down for the second candle. It's like, okay, time for more short. All right, so you get more short, more short, more short, more short. All of a sudden you see this double bottom down here. That's a green candle. VPOC is right there. You can see where the VPOC is. We're going back up for a little while. Okay, what happens? We come right back up into, what's that line there? VPOC. Remember, you cross a level, whether it's VWAP, whether it's VPOC, whatever that level is, the market will tend to cross through that, okay, and then come back and test it. And if it tests it, usually bounces off it. So, see, look at VWAP. VWAP's pointing down. You've got VPOC sitting right here. Market comes up and down, retests it, takes out the guys. See all those, and you know what happened? What happened is all these guys at break even or break even plus one, they just took out their stops. Okay? Now if you kept your stop back a little bit, say for example at VWAP, then you're okay. Then you got more short action here, or you can just play the swings. It's a top. There's a flat top there, flat bottom there, flat top there, nice flat bottom there, or flat bottom there, flat top there, flat bottom there. There's a flat top there. I mean, you can scalp the crap out of this stuff. Okay, so we're playing around. We're right after the open, and if you'll notice, I think I called a short on the open yesterday on Friday morning. I have to look back at my tweets, but I believe I did. And I was looking at this action here, where obviously we had buying exhaustion up here, and then they were just starting to sell it off at, a couple of minutes after. Here's the 9:30. There's the 9:30 cash open. Okay, it popped up a little bit, but the sellers came in. The buyers said, well, let's see if we can drive it up here. Wham! Right into that, buying exhaustion, and that's all she wrote. Bam! Right back down. Okay. So what happened? We messed around. We messed around. Came back down. You can scalp this stuff. Look at all these nice moves. Scalping, nice move, scalping. As it's swinging back through VWAP, you can play these rotations. Okay. So you're expecting this high. You're expecting this high up here to be above this high or this high. Why? Look what happened to VPOC. VPOC moved down, okay, but you're not making a lower low right here. So they're trying to push this down. VPOC is shifting down. They're trying to push this down. It's not working. So what happens is now you've got a higher high right there on the market on that swing. So you can watch VPOC as you rotate around VWAP, and you can sit there and play those rotations very nicely. There we go, playing rotations very nicely, and then you get that. Ooh, baby, look at that sucker right there. Comes back up. You look at the retest right here. Here's an excellent place to take one You've got one here. You've got two contracts down here, because you take the long at the bottom of the red candles if you can. Okay. That's where your entries would be. Bottom of a red candle, entry for the long. Top of the green candles, entry for the short. It's interesting how often that works out. It's not what people are taught. People are taught to wait, but you lose a lot of profit if you wait. And if you're quick in moving your stop to break even or break even plus one, you're not going to lose money on the trade. So what happens? This price goes up, goes through VWAP, comes back down, right there, retests VPOC. That right there at VPOC, what happens? There's that right there. There's a selling exhaustion right there. So you could get in here if you wanted to. You can get in up here if you wanted to. The strats, here's the strat signal. Lots of opportunities if you didn't want to chance this stuff. Lots of opportunities on the pullback to the major, to that major level. Pull back to VWAP, pull back to VPOC. It's right here. Very little risk. Entry trades over the long, and here we go. You could take one off. Say, for example, I could take one off here. Oh crap, is it going to come back in my face? Well, take one off there. Well, what happened? Look at the context of that thing. I mean, it just started, just gangbusters. Well, how did you know if that thing was going to go gangbusters? Well, if it was going to go to the upside, and there were several people calling the rip. Well, how did they know? Well, I don't know. Who knows? But how I would know that is, where's that first pullback? The first pullback does not even come close to VWAP. Okay, so people were starting to take a little bit off their positions right here, and the buyer stepped in and go, no, you don't. There is a selling exhaustion right here. The buyers, you can see selling exhaustion, selling exhaustion, selling exhaustion. All these selling exhaustions down here at the bottom of these candles are going, you're not coming back up here, baby, or not. You're not coming down here, baby. So there you go. There's your buying. And what happened? It bought darn near till the end of the day. Heck, you could have just gone out to lunch. Here we go. And that was a fantastic rip. You had this little price action in here that you could ignore or not, whatever you wanted to do. You could have gotten out when you started seeing this stuff right in here, okay? Because you've got all these resting orders up here, sitting up here, right? You got resting orders up here, which is bounding the market at 76. You've got resting orders down here, which is bounding the market at 7150. So you could take that, for example, you could take that as a range and say, okay, fine, I got out of my long. What am I going to do? When I break out of that range here, that's where I'm going to go. So you could avoid all this nasty choppy choppy crap right here, and say, hey, when I break above that level where all those orders are, okay, I'm going to go long. Why would you not take the short when it broke through here? I'm looking for show of hands. Yes, I'm getting a show of hands here. Why? There's no significant resting orders down here. Look at, they drove the market down. All these resting orders either disappeared or longs got filled. Here we go, back up. When it busted that level right there, you could have gotten in. Could have. You'd have to sit through this nasty pullback stuff here, okay? But look at what value area high did. We're still at value area high, but value area high start moving up. Value area high is moving up. I'm not going to short into that unless I have a really good reason to. Okay, now I'm making lower highs and lower lows. There's a high, there's a lower high there. So do I want to short into that? Well, maybe. I mean, you could scalp it. You could scalp short it for a few points. 46.79. I've got all these resting orders sitting up here, and the market's going, not going up there. There's a buying imbalance right there. Good place to short right there. That's that price level, which is 46.7725. You can make some nice coin here. You can make some nice money. So 77.25 to, where's my nice significant flat bottom down here, which is right in here, right in this area. 69.77. Sorry. 69.75 from 77.75. That's what, 8 points, right around 8 points. That's a nice little range there. Or you could have just gotten out here. But see what happened? The market came up, Ghana retested it, but when it came back up here, it made a lower high, and you ran, and all those resting orders started popping up here. So we're not going to go. We're not probably not going to go up there. And it started turning around well before it got to these resting orders. So here we go. Coming down. Here's the retest of that 7-day VPOC. You'll notice that the VPOC has started. It shifted down. Okay, came up a little bit, and then started to shift down. So retest of 7-day VPOC came right back down into this area, which is your 7-day VWAP. So you've got a bunch of choppy crap right here. God, who wants to get caught in that? Here's your next long trade. 7-day VWAP right there. Came back down, tapped it, went one tick beyond it. We're back into the long. Look what happened. All the buyers are stepping in. The buyers are stepping in here. Buyers are stepping in here. Everybody starts pulling or they get their orders filled and then they get killed. Everybody's right here. They start pulling their orders, right? Now you have orders below the market, significant numbers of resting orders below the market. We're going to keep going up, right? Here's a double top here where you could get out if you wanted to at 83. I mean, there's 5 and 10 point moves all over this chart. There's another exit for your short move. Right back up here, see VPOC buying exhausted. VPOC's right up here. So somebody was basically selling into their buying here. Came back down. VPOC at the top of that candle in the pin. Here's a flat top. What happened? Boom. If you just look for those, if you look for your flat tops and flat bottoms on the bodies of the candles, and look to see what's above that flat top, what's above that, what's below that flat bottom, what's below or what's above the flat top right there, nothing. VPOC up here. Here we go, going down. What's down here? What's down here below that? Nothing. Well, there's really nothing there. Okay, so you get out of your you would get out of your short trade here and go, okay, what's next? What are we going to do? Well, VPOC and buying exhaustion right there. And then you start seeing all these deltas. Oh my God, look at those huge numbers of deltas. Well, the problem is it didn't go anywhere. So when you start seeing this stuff and you don't start seeing price start selling off big time, that's a caution. It's a big caution. Okay? So what happened? It came back down. The sellers, they were probably scaling out of their positions at this particular point. That was not I don't think that was any intentional move to try to drive the market down. I think that was just people getting out of their shorts or getting out of their long trades. At here, they're scaling out. Look what time it is. You know, it's almost 4 o'clock. There's another one where selling exhaustion right here. Stop run. Come back up here. I'm not saying that there are no losing trades on this chart, because that would have been a losing trade unless you kept your stop back further. Some people do. Some people like to keep that. You know, that was only from 46.76 to 46.75. What, 25? What's that? That's a 3-tick stop. I like 5-tick stops, but other people will take a 10 or 20 tick, or even a 10-point or 20-point stop, or whatever that is. I think that's, me personally, I think that's an insane amount of risk. But hey, you know what? I mean, different people have different ways of trading. So what's happened? So now you're getting all this choppy crap at the end of the day. Okay, 4 o'clock rolls around. What happens? 4 o'clock rolls around. All the buyers disappear. Then they come back in right here. So you've got, you're starting to get these flat bottoms, and then all of a sudden the sellers disappear right here and the buyers step in right there, driving the market back up. So, you could conceivably get back in, and then here we go at the end of the day. Pretty close to the end of the day. What happened here? The buyers came in, the sellers came in, the sellers were not able to drive this thing back up, right? They weren't able to draw it down except at the right before market close. Okay? Right before market close on Friday, about 30 minutes before market close on Friday, people were throwing up their position, or people getting out of their longs, which they've held for a while. And okay, nobody wants to hold over the weekend, so they get out of their positions, they sell. Okay, that's why that drop was there. What happened on Sunday? And I saw this, but I'm sitting this short. It's like right into value area high, and I'm looking at the thing and going, but that's the end of the day. That was the end of the session on Friday, and then the light went on. I go, oh, those were the guys who didn't want to hold overnight. Okay, we're still long biased. See, look at the way that value area highs marching up, marching up, marching up. They came right back down to this low volume area right here. Okay, lots of volume here, low volume area right there, just sat there. Okay, when market opened, boom, here we go, back up. We didn't go very far though. Right there, boom. So you're not having. I'm not saying that you have a bias, but you can play this if you don't have a bias, you can play this. There's your buying exhaustion there. There would be your entry for the short. For example, there's your buying exhaustion right up here. There would be your entries for the short. You could take it at the top of that guy. I would not take it on the body of this candle right here. The reason why is that body of that candle is way the heck down, wherever that one is. Way the heck down here. Ooh, that's way, way, way too long for me. I mean, by the time I took the short, that would be way down here. I wouldn't take that there. I would take it up here. Because I've got the reject, the pin reject, and I've got that buying exhaustion right there. That would be a logical thing to do, to take that short right there at the top of the previous candle. What's your risk? You're looking at what? 46.88.75 to what was your high of the day? 46.89.50. So you're looking at a 4-tick risk here. Okay, that's $50. You're taking a $50 risk for what's that? That's a nice chunk of change right there. Well, here we go. We're trading right up in the VWAP. So what's happening? We're having more short action. So we're probably going to bounce around here for a while, and it's Globex. So, and I'm starting to look. I would be starting to look down here at that VPOC for targets down here. That would be the previous VPOC as a target. Previous VWAP down here as a target. So hopefully you guys, I went through that pretty clearly. As you can trade on the pullbacks, move your stop loss to break even. I think that's a short trade. If you move your stops to your stop loss to break even or break even plus one, quickly enough, when you start seeing these bottoms here, because those bottoms signify potential reversal points. So I'm short here. I move my stop to break even plus one here, so it comes back in my face. I don't lose money, and there would be a perfect opportunity right there to take some profit, and just wait, take some profit at the next one, take some profit at the next one right there. So I hope you can see where you can play these rotations very profitably and not get killed. One of the reasons why I made this video is because I've seen a lot of counter trend traders, or I've seen a lot of people get slaughtered in the markets because they try to fade. They try to fade these long moves, they try to fade these short moves, and they get killed because they don't wait for the confirmation. They want to, some people just want to be a hero because hey, I'm a hero today. I called the top of the market. I called the bottom of the market in advance. Okay, fine. But what happens when it doesn't respect that? Which it does. So, what happens when it doesn't? Well, guess what? It comes back in your face. You gotta protect yourselves. New traders need to learn the lesson that capital preservation is the #1 rule. And I don't care how many ticks you make, did you protect yourself? Did you make sure that if the market came back up against you, you could get out of your trade and not lose your shirt? Anyway, I absolutely hope this video helped. Feel free to leave comments or whatever, and we'll see you next time.